Welcome to the Retail Tech Podcast. Today I'm speaking with Steve Sarracino, founder and partner at Activant Capital, which is a VC company that has a heavy focus on retail companies. So I was really interested to find out what Steve's experience has been working with retail related startups and what his thoughts are as far as what is the future of retail or commerce. So hi Steve, how are you?
Hi, Darius. Doing well, thank you.
Thank you for joining. So, Steve, you've been on the other side of the table, I guess, from a point of view of an entrepreneur and startup founders, helping them basically get their dreams up and running and hopefully successful. And I see that you've worked with some of the really interesting companies like even Hybris. So I was really interested, how did you become a VC and how did you get started with Activant? Maybe a little background on those?
Sure. So I'll start with how I even became an investor. So there's two primary reasons. One, a long time ago, my grandfather was a stockbroker and introduced me to the stock market when I was very young. And I bought my first share of stock when I was 11. It was Walt Disney, and followed the market closely. And that was back in the day when we had to look at the Wall Street Journal to find the ticker price or call in. None of it was on the internet. And it just developed a passion for investing at a very young age. And then I was at a firm called Robertson Stevens in the late 90s, focused on technology, and then went to business school. And I noticed another thing that was interesting is all of my smartest friends left whatever we were doing, whether it was consulting at McKinsey or working at Robertson Stevens, and became investors. And those two things together really created this desire almost, or this like long-term yearning just to be on the investment side of the business. And you can't really explain it. You just know that you were built to do this and that it's something that you wanted to do your whole life. And when you finally break into it, it exceeded all of my expectations in terms of what we get to do, from investing and supporting entrepreneurs, but also building a business on our own. And I worked at a couple other shops and had the benefit of just seeing a lot of the different investment firms over the years when I was either consulting or a banker or just in and around technology. And so I decided back in 2010 that I wanted to start something from scratch. And I had a blank sheet of paper and I could build it with the culture I wanted, with the team I wanted, and focus on the things that I wanted to focus on. And we named it Activant Capital, and we slowly built it. We're in our second fund now, which we just closed in February of this year. And happy to go into any of those. But this was like a 20-year process to get here. But certainly it feels good. It feels good when we finally got here. But it feels like we still have a long way to go. And as you know, the venture business is very, very long term. So we're kind of in the middle of it, and we'll see how it goes.
Right. Okay, great. Well, congrats on on closing the second round. Now you can probably lighten up on the travel a little bit.
Yeah, you say that, but you end up traveling lots of businesses. So it never stops.
It's different travel. Okay. Yeah.
It's more fun travel now. Now it's
Okay.
visiting companies. Yeah.
Right. So as far as the fund size, I think the first one was 75 million and this one is how much?
130, correct.
130. Okay. And what's the volume of your investments?
So we tend to run a little more concentrated book and a slower pace. And there's a few reasons for that. One, we're just very focused on finding particular types of businesses with particular entrepreneurs and management teams. But two is we've staffed Activant with actual operators. And so we think that as these businesses grow from entrepreneurial organizations to at-scale enterprise, a lot of the areas that we can help are really around process. So for instance, like financial operations process, product process, and go-to-market process. And so we've developed some expertise in those three areas. And we can only work with so many businesses. So we keep a pretty slow pace of investment. We had 4 platform companies in Fund 1, and we'll have, call it 6 to 8 in Fund 2. And it's like Warren Buffett, or maybe it was Charlie Munger. They said 80% of their return was driven by about 15 investments over the years. And rather than just doing everything, we're really focused on the best assets.
Yeah, and there's definitely a range of VCs or investors that entrepreneurs run into. Some are high volume, low touch, and some are low volume, high touch. I can say from an entrepreneur's point of view, um, it's good to have the support when you need it, but then it's also good to have the freedom to build what you need to build. So I think that's an interesting uh, dynamic and balance to work out, is to know when and how to actually guide people.
Yeah, so I mean, I actually I call we're in an agency business. So, it's not like necessarily a Jerry Maguire, but our job is to find the best talent and to do whatever we can to make them better and fulfill their goals, objectives, and dreams. And so you can do that by, obviously working with their business, but ultimately it's providing them support. And capital is the least of their issue, right? That's a way to connect with them over an investment. And as you know, many investments last longer than most marriages on average. And so this is a long term game, but ultimately, what does that entrepreneur, what does a management team need in terms of support? And you're right. Sometimes it's putting the brakes on and laying off a little bit and letting them do what they need to do, and other times it's regular phone calls, and sometimes we dive into the business and spend a few months on site working with the team. We're certainly, as investors, you can never run the business, right? You're an advisor, you're a support system, and ultimately it's up to the business or the management team. But boy, you can have some great impact and provide great support over the years through the ups and downs. And the key is, no business is ever up and to the right. We were just chit chatting about Uber and what's happened recently there. Every business has its issues, no matter how good it is. Every business has its problems, and the key is just to stay calm and work through those ups and downs together, and not make rash decisions, and really focus on the long term. And so, actually, one of the things, Darius, we did in our second fund is we asked for a 15-year lockup from our investors, because we realized that with a longer term approach, not only can we make better decisions together with the entrepreneurs, but it just differentiates us dramatically,
Hmm.
because we can be a lot more patient. And I think that we'll probably see more of that. And I think more venture firms will follow our lead there.
Wow, that's pretty good. I mean, to get that kind of a commitment, so you don't have to go through the I guess the fundraising process over and over and spend the time and energy on helping the companies, basically.
Exactly. We can make decisions in decade-long increments or multi-decade increments rather than, for instance, pushing a team or a business too hard to get to a quick sale.
Right,
It's really just taking a longer term approach to the decision making and capital allocation.
right. And I mean, we can see the companies that really started in the 90s, in the late 90s, are just starting to show the massive promise. I mean, the leaders. I mean, probably not even looking at Apple, which was probably in the 70s, but Amazon,
Yeah,
Google,
Amazon for sure.
yeah,
That's right. I mean, imagine if those original investors in Amazon still held it today.
yeah,
And they should have. And they had to go through the ups and downs in 2000, but ultimately it played out. But yeah, that's exactly right. It can take 15 to 20 years to build a business.
right. So as far as the stage of the company, you focus more on the growth stage, right?
That's right. So late stage venture and growth.
So that means basically, the company's already had their seed round and maybe even a round. And I mean, these terms really are kind of like losing their original meaning anyway right now, because
That's right.
so but so but you are looking for a company that's already had their product market fit, right? And is starting to see growth. They have a formula and they just need to, you know, uh, focus on that. Is that basically what you're looking for?
Yes. So they tend not to have the formula yet. but there is a product. It's in the market, and there are people buying it. And so I agree with you. The seed in A doesn't mean much anymore. So we've done it. We've actually done an A round. We've done an E round. We've done bootstrapped and everything in between. But typically there is some semblance of product market fit. What we found with our businesses though is where we stretch on the risk profile. So there's four major risks, right? There's product market, execution, and financial or balance sheet risk. And what we like to see is where the market, the investors generally don't understand the type of market risk or where the market's going. And because we focus on things like commerce and retail and IoT, we have a different or better view on the market and can look around that corner and understand where that market's going. And that the product or service that that company's selling is well designed for the market, not today, but 3 years from today or 5 years from today. I think that's where we really excel and can differentiate, and that's where the long term returns are, right? I mean, it's almost like saying, yeah, it's so easy if you can predict the future, but it's not really predicting the future. It's just having slightly better information on the market and being 60% more accurate than your competitors.
Right. Now let's talk about a few of the portfolio companies. What excites you about what these companies do? For example, like New Store and what Stefan is doing.
Sure. So yeah, I mean, you can't see I'm smiling. There's so
I can
many things
actually
that
hear it
excite
in
me
your voice. Yeah.
about New Store. So Stefan is an iconoclast. He's incredible. He founded Intershop and took that public. He founded Demandware. They took that public and sold it to Salesforce for 2.9 billion. This is his third go around. It's a broad order management system, the mobile first that does it's essentially, it's retail in the box. So it's everything you need from clienteling to a POS system in store, inventory management, order management, and of course, online ordering. And so ultimately it unlocks omni-channel, truly unlocks omni-channel for a brand or retailer. And so that all makes it special. I think if I was to narrow it down to two things though, at each of our businesses, and Stefan included, is one, so it's the entrepreneur and the team around them. Stefan has many of his senior people and best people from Demandware, and has hired some additional people, and they're a great team, cohesive. They work together, and Stefan he's happiest when he's with his team and working. He's amazing. The other thing that gets us excited is we look for businesses where there is a supply of one, meaning there are competitors, but there aren't any direct competitors that have been willing to make the type of investment that we're willing to make. So we've invested, or total New Store's raised $90 million. Stefan personally has invested a big chunk of money in it. We've invested a lot in it. And, we spent the time to build the factory to produce the product that no one else has. And what we found in the market generally is that supply drives price more than demand, meaning if there's only one of something and a couple buyers, that price tends to trade at a very high multiple, versus if there's 5 or 10 of something and even 100 buyers, those prices tend to trade at lower multiples. And so, those are the two things that get us excited. And, it's the entrepreneur and then just the relative competition.
So that's very interesting. The number of suppliers actually has a different type of an impact on the price than the number
Yeah.
of purchasers.
Purchasers, that's
Right.
right. And I'm not talking about the price of the product, but the ultimate exit of the business.
Right.
So
Right.
there's only one business like New Store in the world. Obviously, we're pushing to take it public, but in an M&A scenario, there's only one, and there are several buyers, and so those tend to trade at very high prices. Versus when we look at other markets, and this is what happened in '99, and you would see 7 or 8 businesses form, within a year of each other, that all are attacking the same market. They all had very similar projections, and they were all assuming that they would be the market leader. Well, obviously, only one of those sets of projections would be correct, if any, because only one's going to be the market leader. And it makes it very difficult to invest. It also, what is the relative price of a business like that versus a New Store where you're investing heavily? I mean, it took them 3 years just to get their product developed. They just started really selling it in December. To do that, it takes adults that understand the market and are willing to invest a lot of capital. And so as an investor, this is the fun part, right? You have to have massive conviction that you're right on the market. It's not just the product, but it's also the market. And of course, like it provides some comfort having Stefan at the helm because he's
Right.
done it before.
Well, yeah, I mean, definitely his experience and what he's built and what he's been through is not the typical type of experience you can find in founders. So that in and of itself is de-risking the business by a large factor for you. And then,
That's right.
for him to actually work with you, it also says a lot about you. So kudos on
Thank
that.
you.
Yeah, because
Yeah.
I'm sure he
And
has a lot of options. So
he did. He had a lot of options. And, look, we're building a business too, right? Activant is a business. And if Darius, if you told me 3 years ago that we would be leading Stefan's B round, I would have been out of my mind thrilled. And, look, fast forward and we were able to do it. And it just shows you there's so many firms out there, the market's competitive. And we were talking about this earlier. But if you're focused on some subsectors and you're really good at what you do and you're good people and you've got a good culture and people, it's a culture that people want to be a part of, you're going to get into great situations. And so, even though people say the market's saturated, it really isn't. There aren't that many. When we look around, there just aren't that many firms that we compete with directly, day to day. We see all kinds of different people. But look, I appreciate it. It was a big compliment. I appreciate you making the compliment too.
like Stefan has been through so many different projects to that scale and taking them public. I sort of like defer to his experience definitely in a lot of things that I haven't been involved in.
I thought the same. I thought the same way. Is that hey, we have Stefan at the helm. Everything will be smooth sailing, and like every business, there are still ups and downs, and this is where we as an investor group, but also entrepreneurs out there listening, is that there are things that we work through at New Store as well, and it's nice having a steady hand at the helm, so no one is quote unquote freaking out or getting really upset. It's a calm discussion, but things happen and there are issues, and no entrepreneur knows everything, no venture investor knows everything, but together our decision making will be much more solid. And so it gave me a lot of confidence through my career working with someone like Stefan that when you take the right approach and you work collectively as a team, people can have a lot of incremental value as investors.
So when I think about Shopkeep, which is another one of your investments, Shopkeep is also in the business of retail POS.
Correct. It's cloud-based POS system.
So wouldn't you say that it is somewhat overlapping with what New Store does? Because New Store also has its own POS interface, or
It
maybe.
is. It's a little bit competitive, although Shopkeep's end market tends to be at the more the SMB level. So 1 to 100 units. And you may already have, if you're larger, you have an ERP system or an online system that you want to use, and omni-channel may not be as important for you. But you want a more efficient POS system that provides you, up to the second updates on who's buying what and where your inventory is. From an in-market perspective, they're not competitive, but they both have a POS system.
So that's an interesting point because a lot of entrepreneurs think that my product does X, and this product also does some part of X, and they could be competitive to me. But the competitive landscape or the picture is not just the product itself. It's also the end customer is a major factor in that. Just because you have a POS system, you're going to sell it to everybody. You're going to learn really quickly that that's not going to scale, and you're not going to be very successful. So you have to focus.
Yeah, that's right. Market segmentation and understanding that market is so important. And Mike, the CEO of Shopkeep, and Stefan, the CEO of the New Store, have never run into each other, not even close, at a potential customer. And so, yeah, when you have, I see where you're headed is, as you're an entrepreneur looking for investment and you look across your portfolio, it might appear that there are competitive companies, but in many cases they're not. And the advantage is you get an investor that really understands your business well, but from a different part of the market. And so, I would never jump to conclusions just based on someone's portfolio, whether or not they can either A, add value, or B, be put in an awkward situation where there's direct competition.
Right. And I mean, really, I was talking even more from an entrepreneur's point of view is that when you're looking at building a business, it's not just a product. It is also the business. It's the sales. It's everything has to go right, really, for things to work. So if you're only thinking about product and making a decision that, okay, this VC is already working with my competition, it's not a complete, decision. You have to look at the whole ecosystem and see really what are the other differences.
Totally agree. And it's not just go to market, but also I'd argue business model is becoming a lot more important. I mean, Microsoft, it wasn't a product innovation, it was a business model innovation. And I think we'll be hearing more of that over the next few years as the market shakes out. But I agree. It's more than just product.
So the other company that I know of, is Retail Next. Now they focus on the actual what's happening in the store. So how did you decide? How did you get excited about that?
So Retail Next is it's the only company in the world that can effectively do what Amazon Go does. That's not Amazon, and so they provide it's all the detailed interior analytics. That was a market 2 years ago that we knew was going to be important. So, as an analogy, online analytics is a massive business, right? So Google Analytics and then Omniture, which I believe was bought by Yahoo or whoever, but that's a $10-ish billion business is just online analytics, but that accounts for 10 to 20% of all sales. So in theory, the offline market is, should be anywhere from 5 to 8 times larger, depending on what numbers you look at. And where online, intelligence falls down is on offline attribution, understanding if someone, looked at something online and then bought it in store, how do you connect the dots? And the only way to do that seamlessly is with something like Retail Next. And so we got very excited about it. This was maybe 3 years ago, 2015. There were multiple competitors back then, but the competitors are now largely gone. And so there we looked for the right product. We had to have the right product, and the market has slowly come to us. And then with Amazon Go, it's the pace has quickened.
Are other retailers actually looking at providing a similar experience to Amazon Go, the actual complete elimination of the checkout process?
So that key question, they should be. If you look at, this is my view, okay? So if you look at Amazon, the one major innovation, and usually it's one thing that wins, particularly consumers, was a simple checkout. Everything else came later. If you recall, like 3 or 4 years ago during the holiday season, they shipped, people were trying to order Christmas presents and they came the day after Christmas. And everything else had to catch up, the warehousing, the logistics, the supply chain. But the key was a checkout. And Bezos, the brilliance of Bezos is he realized, okay, that worked in online. Now I'm going to make that work in offline. And all I'm going to do is provide seamless checkout and everything else will catch up, right? So right now, Amazon Go, you can't have, for instance, like a basket of apples and you put 4 or 5 in because they don't have the technology yet, although Retail Next does, to account for how many apples you pick up, but they will get there eventually. And so if a retailer isn't focused on figuring out seamless checkout, particularly not just a retailer, but it's more so in grocery, they're going to be in big trouble, right? Because like high-end retailers are still going to, people want that clienteling experience. When you're spending, $80 to a couple hundred on a dress or a pair of shoes, you're probably not going to just pick them up and walk out of the store. But with grocery is very different. And if you look at the 2 areas Target and Walmart have invested the most in store has been grocery, because that drives the regular visits. And so Bezos has said, okay, fine, I'm going to create seamless checkout in grocery and I'm going to buy a grocery. And so this is all a test. Amazon Go is a test. Eventually you'll see it in Whole Foods. It's just a matter of time. Their technology isn't as far along as Retail Next, but it's going to catch up.
Is Retail Next focusing on the grocery industry right now?
They are very focused right now on convenience and smaller form factor grocer. They haven't, the larger grocers just haven't engaged with them. And so they obviously can do it, but they're, I
Which
just
is
don't think that,
interesting. You know,
yeah.
you would think that I mean, because implementing these technologies is not quick. It takes time. And if they're not starting to do that right now, where are they going to be in 5 years?
Out of business because Whole Foods will roll it out at lower prices and just like the seamless checkout created dominance for Amazon online, it's going to create dominance for Amazon offline.
Right. And then combine
He is
that,
going
yeah.
so yeah, he's going right for the jugular at all the big box, particularly Walmart and Target with grocery.
Which is, yeah, I mean, again, it's like a kind of like a mind-boggling question for me when I see the other big grocery chains, like Kroger's and Albertsons, and for them,
Costco.
Costco not looking into these things.
There's very smart people at all of those places. I think, look, human nature, we tend to be reactionary, particularly here in the US. And I think once they see it, Amazon Go working on Whole Foods, then they will probably react, but it's going to be too late because then it's a matter of Bezos just rolling it out. And look, it's been shocking. I know Retail Next has had discussions with a couple of the big box guys, and their their view of the world I could only describe as pompous. There's a very they just think that
Like
they will
blockbuster type
survive.
of yeah.
Yeah, they'll survive no matter what, and the world owes them nothing. And look, nature is not a friendly place for animals that can't defend themselves, and it's
Okay.
it's gonna get it's gonna get ugly, unfortunately. But look, the nice thing is we have time, so there's still time. Amazon Go is very very early, and there's a lot of kinks in it, and they just opened that new one recently. But no,
Right.
it's a good point. I don't know why they're not reacting faster.
Yeah, because I mean, all the signs are out there. All the signs are out there. There's, you don't even need to see it in Whole Foods. You just, it's coming. So anyway, that's like one of my personal things.
Yeah, well, no, it's timely, and I don't. It's really just the seamless checkout that drove. And think about the first time you got out of an Uber when you didn't have to hand them money you were so used to from a taxi perspective, and how nice that felt. It's
Yeah.
the checkout and limiting that interaction you have to have is it's extremely valuable.
And then combine that with delivery. I think that pretty much puts the
That
nail in the
seals it.
coffin.
Yeah, that seals it. And the higher quality product at Whole Foods. I mean, it's
Right.
so obvious what he's doing to you and me, but it's just amazing that
Is Whole Foods the
and
next AWS?
yes, that's a great quote. I'm gonna borrow that. But yeah, it could be. It could
Because
be.
it's a platform, really.
That
So,
Darius, that's a really good point. And you look at Google and Azure, Microsoft Azure, and they're all trying to catch up, but they're so far behind in the tools and simplicity of using AWS isn't there with those other platforms. Oracle's trying to catch up with Oracle Cloud. And I think someone told me this. I don't know if Bezos actually said this, but I'm gonna just state it anyways. That Bezos was surprised that it took everyone else so long to figure out what he was doing at AWS, and he had something like a 6 year head start. And the same thing's happening again in grocery. And I love that you called Whole Foods a platform. You're spot on. I've never thought of it that way, but you're right.
yeah, I think it makes sense. Again, thank all the credit goes to Bezos for, training us and helping us. But I mean, he's given us signs before, so we should be able to like extrapolate that into other things that they're working on. So,
And that's why Bezos is the richest man in the world.
yes, talking about the future, what are some of the other technologies that excite you about retail in the future? Like I mean, artificial intelligence and machine learning, of course, already in analytics, heavy data. AR, VR, online to offline. I don't know. I'm just blockchain now. What are you thinking about these things? What excites you?
So in retail, in the near term, we've largely made our bets that we're, seamless checkout, unlocking omni-channel, which really isn't done, right? Retailers still don't have 100% visibility into their in-store inventory. And so there's so many basic things they need to do before they get to the future, but where it will head, and you sort of hit on it, is really machine learning. I mean, people call it AI. AI doesn't really exist, and that's a whole nother discussion, but it's a set of advanced algorithms or machine learning tools that eventually will be able to not only optimize for what inventory to carry and where, but also can get predictive around when you're going to need things, what styles you should be buying in the future based on, up to the second patterns you're seeing in your stores. And I think, all those will result in higher inventory turns and shrinking that supply chain down. And I think that's the next step, but that step we're not even close to yet because the retailers don't have the data to get there. And so I don't think retail will see the benefit from machine learning or quote unquote AI for we're years away from that. And so I'm curious to see how the short term plays out, given in particular our discussion just now on Amazon. But longer term, they got to unlock omni-channel and they got to figure out how to increase those inventory turns.
Right.
There's no magic, right? There's no magic bullet for brick and mortar. It's just getting, retail. If you talk to someone that actually started a retailer from scratch and grew it to 1,000 stores, it is one of the hardest businesses. It's the largest business in the world, counts for most of the GDP, globally. It's highly competitive and very difficult. And there's no technical magic bullet out there. But again, the signs are all there: omni-channel, checkout, and then utilizing big data to make better decisions around inventory and merchandising. And like merchandising is a great example. It's something that's been done with gut feel, and some people are brilliant at it, like Wexner and others. And it's a lot of it that's managed, not particularly for him, but generally in the industry is on Excel spreadsheet. And how do you take that from a gut feel to doing buying on Excel to using data to actually really inform your purchasing across your entire network? And no one's really doing that right now. There are solutions out there like Select, but retailers generally aren't in a position to even utilize that data appropriately. Right. So I think that merchandising is a big area too, where there could be a lot of improvement.
Which is again where Amazon actually has done a lot of really massive investment in how they manage the entire marketplace with their own products and also third-party products. So
the third-party products is what's going to get them in trouble. I mean, I don't know how many times it's happened to you where I've ordered something and expected a certain packaging and it came from somewhere, deep inside Shenzhen, and I didn't even know if it was a real product. And so that's an area where Amazon could get themselves in trouble, where they grow that marketplace too fast and don't provide some level of oversight and quality and value checking. But
I agree
with
you.
But otherwise, you're right. Like they're going to understand merchandising better than the retailers because they're actually collecting data on us.
Right. So what about voice?
Yeah. So voice is, from an investment standpoint, it's really hard to figure out where to place our bets on voice because you've got some big platforms like Alexa and Siri and Google now came out with one. But voice is going to be long-term just a huge market. So we'll order things over voice. If something happens in my house, my daughter will be able to call for the police just by talking to Alexa. It's going to change. It's going to change the way that we interact with brands and the way that we order, just like the phone changed those things. And so what we're trying to figure out from an investment standpoint is what will those changes produce what will how the market change based on the behavioral changes. From a investment standpoint, I don't know, how you're going to make money investing in voice and competing with Amazon right now. And so we haven't really seen a lot there, but it's going to change the market, and that's what we're trying to figure out. But I agree, voice is massive. I don't know if Professor Scott Galloway has been talking a lot about how voice is going to change everything, and he's got some really interesting thoughts on it.
Right, right. Yeah, I mean, one area that I'm actually, delving into a little bit is the nice thing is that they've actually opened up the ecosystem, so you can actually build apps or skills that run on their platform. So that is potentially one area where, like even companies that are massive companies that have just built products that go on the iOS App Store, for example, like Zynga and different game applications. So I think there is definitely some potential in that. But as far as like really the platform itself, the framework, it's hard to believe that anybody could catch up with Amazon and Google, really.
I agree. I agree. I think like what you said is it's going to be as impactful as the smartphone in our
Yeah.
lives, and so as entrepreneurs, as investors, we need to figure out, okay, then if we're like in 5 years, remember the iPhone was introduced in 2007, and think about how much it changed everything that we did 5 years later. Voice will have likely have that same impact, and so that's what we're trying to figure out right now.
Yeah, think 2027.
Yeah, 10
So,
years. It's hard to
yeah,
do.
that's it, 10 years. What do you think is the future of humans in commerce?
For commodity goods, the interaction we're going to have with other people is going to be basically zero. But I think the experience part of it, and we've seen this with millennials, they'll actually pay more for the experience, is going to be more important. And we're going to want to go to, the store is ultimately the temple for the brand. And we're going to want to interact with, particularly higher ASP products or more brand oriented products in store with those selling with the clienteling. I think that will become more important for humans. I think, look, the more that we spend on Facebook and these massive like time wasting apps and the iPhone, the more we're going to crave actual interaction. And so I do think you'll see a return to people actually going to malls again and going, the malls will look different, and they'll be more experiential, but going to stores and wanting to interact with the sales clerk and look at product that's not out on the shelf and understand the attributes of the brand. And I think that'll become, we'll see the pendulum swing back.
Last question. What do you think about how SoftBank is changing the world?
Oh gosh. So, okay. At the base level, SoftBank isn't king-making companies. So they're not coming in and, you get blessed by SoftBank, you're now going to be the winner. What they're actually doing is waiting until the winner's already been identified by the market, and then piling capital in, which is smart because Masayoshi Son is defending his downside, but he believes that long term, right? Because I think his fund is it's a long term fund like ours.
Yeah, I
By
think it's
investing in
looking
the,
like 200 years or something like that.
but I think his lockup is around where ours is, around 15 years. I don't quote me on that. I'm not sure, but no, I think that he believes long term that you can still earn multiples of your money by doing that. And so as an entrepreneur, you get SoftBank in. It's like you've already been recognized as a leader, and it's sort of the cherry on top. Or if you want to keep them from investing in somebody else, like what they did at Lyft and Uber is very instructive, right? They invested in both, and so I think you just got to watch out for that if you have a larger business. Like I think generally, like it's not surprising. There's half as many public companies as there were in the 70s. The private markets are much larger. It was only a matter of time. And, from a capital allocation perspective, what Masa has done, it makes complete sense. And the investors in it, like Mubadala, who I think extremely highly of, it makes sense for them too. And so, from our standpoint, it really doesn't change the way we operate. It's just, it's interesting to watch. But, it's like going public, like getting an investment from SoftBank at 100 million plus is like, it's almost like an IPO. It's something to celebrate. And I think the losers in this, though, the real losers are like, my parents, the retail investors. They don't have a chance to participate in this market appreciation. And you talk about like, a whole nother conversation about wealth disparity and what's going on in Silicon Valley. And I think that this is going to come back to bite everyone. I think we need to figure out how to give, everyone else the ability to participate in the capital gains that are accruing in the private market. And,
That's a great
that
point. Yeah.
that's what I worry about more than anything.
They are definitely changing things, and just the numbers are astronomical. And who knows? Maybe Uber needs to do their Uber coin, and other customers can actually get in there.
Yeah, yeah, God, that's a whole nother conversation.
It is. It is. Well, thank you so much, Steve. This is fascinating conversation. I really appreciate it.
Thank you, Darius. I appreciate it too.
Awesome. Have a great weekend.
You too. Take care.